Good morning and welcome to Vecco Group's presentation. I'm the Managing Director, Tom Northcott, and today I'm going to take you through an overview of the energy storage market, vanadium batteries, and how Vecco is positioned to capitalise on the growth in electrification and renewable energy. Please take note of our disclaimer as we move into the presentation. Vecco Group is uniquely positioned to mine vanadium and produce vanadium electrolyte for vanadium flow batteries as an end product. Our resource and first mover advantage positions Vecco to be a leader in this industry, particularly in Asia, but we also see opportunities to grow into Europe and the US. The global shift in electrification and renewable energy requires a significant amount of storage. This creates a massive global addressable market for vanadium flow batteries, particularly within the areas for utility scale storage and large industrial users. Vecco has a large, very shallow, high-grade resource located in the Northwest Minerals province in Queensland. The low impurities of this style of deposit are easily amenable to producing a high purity vanadium, which is the preferred vanadium for vanadium flow batteries, and a high purity alumina product. Our project has an NPV of over 580 million and an IRR of over 40%, based on a capital cost of approximately 120 million. We also have a first mover advantage in that we aim to be constructing the electrolyte plant in the early parts of 2022, with this in production by the second quarter of next year. We often get asked what type of energy storage is going to be the dominant player in the market, which technology is going to win. Our view is that the size of the energy storage requirement globally is so significant that it won't be just lithium or vanadium or hydro. It's going to be all of these and more in order to cover this market. In Australia, the size of the storage market here is approximately 80 gigawatts. The basis for this technology is taking the solar power generation and wind power, taking that when it's generated, and then shifting that energy to when it's most needed during the peaks at night. So why vanadium batteries? Where's the strength of this technology? These are a utility style asset. They're large systems, they're heavy, they're not made for mobile uses. They last 20 to 25 years. The vanadium electrolyte itself actually never degrades, making it one of the greenest batteries on the market. They're completely non-flammable and they have 100% depth of discharge with an unlimited ability to cycle the system. This makes it perfect for these large uses where it can be used quite frequently without increasing a degradation curve. This chart at the top sets out the main differences in degradation between a vanadium flow battery and lithium. Essentially, a flow battery can last 2 to 3 times longer, and in doing so over the life of the asset it's not only a much greener battery, but the levelized cost of energy is also lower. The Debella mine's located about 700 kilometres west of the port of Townsville, and our electrolyte plant is to be located in Brisbane. We also have an option that we're considering for its location in Townsville. So where do our strengths lie? Our deposit sits at about 15 metres deep and is quite flat lying. So the mining costs of a free dig truck and shovel operation are quite low. And we're also looking at options for electrified equipment so that we can reduce our environmental footprint from the mining process. The high purity products that we produce are very well suited for the battery market, being the high purity vanadium for flow batteries and HPA, which has other uses in LEDs and separators in lithium batteries. We're well progressed through our pre-feasibility study and we'll be commencing our mining lease application and environmental approvals process shortly. In relation to the electrolyte facility, we've completed the preliminary design with detailed design commencing next week. And on the back of this, be looking for procurement and then construction into the early part of next year. We have secured an MOU with a large multinational electronic company, and that is to supply that company with electrolyte in Australia for up to 10 megawatt hours per annum. Our business model is to partner with the main manufacturers of vanadium flow batteries. We're not a battery company, we're the electrolyte supplier, which positions us to focus on the part of the business that we specialise in, and for the battery companies to focus on the technology and the battery hardware. This allows us to leverage off their R&D and the work that they've done with these systems, and also into the projects that they're pursuing to deploy their batteries. Our electrolyte facility will be capable of producing approximately 35 megawatt hours per annum of electrolyte, and this will be enough for the first small stage of batteries. We will, however, be looking to scale this up quite quickly. In terms of where we're starting and where we're going with the production, the purpose of starting the plant now is to secure our market position, but quickly scale up as the mining operation scales up. We're going to require our own feedstock in order to be able to supply these levels, but eventually over the course of the next few years, aim to be producing about 400 megawatt hours per annum of electrolyte within Australia. Overseas and other markets, we will be looking to expand into those, provided we can supply sufficient quantities from the mine, and would be looking to increase that scale once we've commenced production. I'll now move on to an overview of the Vanadium and HPA project. Located in northwest Queensland, the project will be capable of an initial production rate of approximately 120 megawatt hours per annum, and this is from approximately 12 to 1,300 tonnes of vanadium pentoxide. Along with this, we're targeting production of 1,200 tonnes of HPA. The JORC resource indicated and inferred is 175 million tonnes, with higher grade areas for the commencement of mining at 0.57%, and this is at quite a shallow depth at about 16 metres. The mining lease approvals and BFS timeline that we're looking at is approximately 24 to 28 months. The work that we're doing at the moment suggests that this might be a shorter time frame, but we're allowing ourselves this period of time. The key strengths of the deposit are that it's a shale-hosted deposit within the oxidised areas of the shale, making mining and processing particularly easy. Our grade at the start of mining is a 0.57% vanadium pentoxide, and we have over a 40-year mine life. The deposit itself is very flat-lying with a very stable grade across the mining area. There's no blasting required, and the processing that we're deploying for this is a relatively standard flow sheet using beneficiation process, atmospheric acid leaching, and solvent extraction. In summary, Vecco Group's capturing a first mover advantage in Australia to supply the electrolyte that the large multinationals who are progressing with their vanadium flow battery technology are going to require. There's a number of projects that are currently on foot that we're working on, and we expect for our initial production to be sold into next year. This is going to create a short-term revenue stream for us, but more importantly, it solidifies our place in the market for the future projects. This will then in turn become the offtake for our mining operation into these large projects, which are largely investment-grade companies. Having our own supply of vanadium is going to be critical as these projects globally, the vanadium flow battery projects globally start to progress. we're going to find that there's just simply not enough vanadium. Therefore, having our own supply is going to ensure that we can always provide electrolyte and at the right price to ensure that this market can continue to grow. Thank you very much for listening, and please feel free to contact me if you have any questions.